And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube here on an incredibly volatile day in financial markets. Carol Massar, it's not just equities, it's everything in between here. Yeah. A market that continues to be bounced around by the situation in the Middle East.
Yeah, I mean, I had so many names that are on my gainers list. I'm kind of crossing fingers, but the unbelievable swings that we've seen, and we have so many questions going into the weekend. I mean, do we see the administration, the president just talked about it, in terms of boots on the ground? Does that potentially happen still? Do we see Carg Island, so incredibly important when it comes to exports out of the region? And so does that happen, and just more disruption to the global energy trade? So I think, yeah, you're definitely seeing a risk-off trade here going into the weekend.
But a bounce, as you see there from the S&P, as you mentioned earlier, Carol, off its lows. It was down as much as 2% earlier. But as Carol mentioned, energy certainly the focus. WTI at 97, so off its highest levels of the day. Same with WTI, or same with Brent rather. It was up as high as $113 a barrel, now up to $112 a barrel. Still, both of those up more than 2%.
And as usual, I'm taking a look at where you can find a haven asset right now. You're certainly not going to find it in the bond market. You're not going to find it in gold. But then you take a look at what's going on in the dollar. The Bloomberg Dollar Index actually managing to put together a gain right now, higher by about 0.5% or so on a very, very risk-off day.
A very risk-off day here as we parse all of the action that we saw on the day and on the week, and maybe try to make some sense of what to expect when you come into work on Monday. The Dow Jones Industrial Average is going to lose roughly about 400 points on the day, or about 0.9%. The S&P, it's down about 99 to 100 points, or 1.5%. The NASDAQ Composite down to more than 400 points, or 2% even. And the Russell 2000 losing about 56, 57 points, or about 2.3%. I do just want to point out here, Carol, that all of the major indices now are closing either at or below their 200-day moving averages, and the S&P 500 doing something it hasn't done since April of last year, and that's closed below that 30 of that 14-day RSI, a technical indicator of now oversold conditions.
Yeah, that relative strength index, right? That technicians certainly watch. But do we get a bounce, or do we continue to kind of trend even lower from here? S&P 500, guys, so as Romaine laid out all the numbers, you're not going to be surprised. 389 names to the downside on this Friday. 114 actually gaining ground, some decent rallies, Katie. So it's always a reminder that there are names that stand out here.
Yeah, certainly when you take a look at the sector level as well, as measured by the circle, not a lot of green, but two sectors managing to finish in positive territory. That is financials and that is energy, just barely, but still above the line here, though. 9 sectors in the red. In terms of what your biggest losers were, utilities down by more than 4%, real estate off by more than 3%, and tech as a sector off by more than 2%, Carol.
All right, so this is so indicative of the kind of day that was here. Romaine, you talked about the swings, the volatility.
I'm surprised you found gainers.
I am too. Well, check this out. Listen to this. FedEx, it was up 27%, guys, at its highs today.
What?
Wow.
Yeah, and we're finishing with just a gain of about 0.8%.
Barely made it.
Yeah. Barely made it. And the company, we know the story, right? Raising its full year profit forecast. We saw the stock up the most in 10 months before we kind of pulled off those highs of the session. The company talked about restructuring its delivery network, getting traction, a lot of stuff going on. It also says it does not expect the war in the Middle East to have a direct material effect on its business, but the broader consequences, including higher energy prices, volatile shipping patterns, are adversely affecting the global economy. No, come on in.
Just want to say FedEx was up about 7 to 8%. You said 27%. That
Did
was the point.
20?
That was the
Oh,
point.
I'm sorry.
Yeah, I was like, what?
Sorry.
Amazing.
Sorry, I had my screen kind of kicking off.
I hate correcting you, but
No, you love correcting me. 7.6%. I'm sorry, I thought that was a little crazy too, but I had my screen. I only have a little small screen to work with, and I've got a lot of things going on. Yes.
I think all our screens are the same size, are they not? Or
How many? Do you only have one paddle in front of you?
Just one.
Oh.
We got to get you another screen. We're going to work on that.
All right.
Yeah.
All right.
Can I get another screen too?
All right, TBD. I'm just going to move on. Like, I don't know if anything can save me now. All right, ARM holding. Let's see if I get this one right, because we did see this one holding on to its gain of about 2% here at the close. It, too, though, was a lot higher in today's session. In fact, it, too, was up about 7.8% at its highs today. Okay, so ARM holding was a top gainer in the major averages. HSBC upgrading this one to a Wall Street high price target, raising it to a street high of $205 from $90, playing a little catch-up there, and says ARM is now firmly in the middle of a transition from being a smartphone-dependent semi-IP play into a major AI server CPU beneficiary that remains undervalued by the market. The analyst, frankly, writing that. And then just quickly, I want to go to Dell. Dell, too, that one surging more than 8% earlier in the session, holding on to a gain here at the close, just about 0.5%. And this one really spiked a lot out of the gate. It was a top gainer in the S&P, and basically winning on Supermicro's woes. Dell is a chief competitor to Supermicro, so the Supermicro story, I'm going to pass actually over to Tim, because it just gained Dell as a result of what was going on with Supermicro.
I'm glad you ended with Dell, because I want to.
You're welcome.
I was going to start with Supermicro, but I messed it up. It's okay. I'm going to go to Supermicro now, down more than 33%. Today, which is pretty wild. This is the worst day going back to October 2018. That's when it fell more than 40% in a single day. The U.S. did charge the company's co-founder, Yishayan Wali-Lia, with illegally diverting NVIDIA-powered servers to China in violation of U.S. export controls. The prosecutors said that Lia and two others allegedly sold the hardware to a Southeast Asian company and coordinated it for its ultimate shipment to Chinese customers, and they made efforts to evade scrutiny. Supermicro, for its part, said it's cooperating with U.S. authorities and has put Lia and another defendant on administrative leave. And the company stated that the alleged conduct is a contravention of the company's policies.
This story is fascinating, also because of how fast it rose. And remember when it got put into the S&P back in, what was it, 2024? There were a lot of people saying maybe that was premature, and now you have this this whole investigation here, raising a lot of questions here about what the future of this stock can be.
Yeah, we had a great chat with Bob Van Voris down at the courthouse earlier today, and he laid out the potential implications for the individuals who've been charged, and that's some serious jail time there. So we're going to continue following this story. I also want to check on the Bloomberg Mag 7 Total Return Index, because every single member of the Mag 7 was lower today. This fell more than 2% as a whole, but as I mentioned, this was what really pulled the market lower today, the S&P 500 and the NASDAQ 100. Also, this is an interesting story. Swarmer, it's a tiny drone software company. Swarmer.
Oh, just checking.
Fell 30% today. This stock soared close to 1,000% in the first 3 trading sessions after its IPO. Shows how the war in Iran has reshaped the outlook for the defense industry. Though swings like this echo what was associated back in the day with meme stocks. Romaine, you remember those, right?
Yeah, absolutely. I mean, I was paying attention to this earlier this week, and look, long term, I guess you can make a bet here that, this is the future of warfare, these sort of smaller, cheaper drones. But, like I said, to get that kind of pop coming off of that IPO seemed, a little stretched, to say the least.
Some might say frothy.
Some might say. I would not say that.
I'm not saying it.
Yeah, I'm not saying that either. I do want to just turn real quickly to what we saw in the yield space here. The sell-off continued in a huge way here. On the short end of the curve, of course, everyone now pricing out any chance of a Fed rate cut this year. 9 basis points on the day for the 2-year, but we should just point out for the week, we're up something like 17 basis points here. So this gets to the idea of where investors' heads are at when it comes to yields. But really, it was a parallel shift, not only on the day, but really on the week as well. Your benchmark 10-year yield up 10 to 11 basis points on the week, third straight week where we've seen double digits out there on that basis points, or I guess what is that? I mean, it's technically not double digits, but you know what I mean. 20 basis points, 14, and then this week now 11.
And it's pretty wild to think that just 2 days ago we had a Fed decision. We heard from Jerome Powell, and bond traders' thinking has changed so much since then. Now the possibility of a rate cut in 2026 being totally priced out. And as I mentioned, the U.S. dollar seems to have been the big beneficiary of that. I'm taking a look at the CFTC positioning data, and you have hedge funds and other speculators actually flipping positive on the dollar for the first time this year. Certainly a sign of the times when it comes to the current thinking around how what's going on in the Middle East with oil prices, how that's going to shape monetary policy.
Yeah, I mean, it really comes down to timing, right? Like when, everybody keeps talking about the timeline. You even got that from Fed Chair Jay Powell, essentially. Like you can't make predictions. You can't really figure out the outlook until you know when this is done. And I think this is going to be an interesting weekend. We had a conversation with a guest just talking about potentially the escalation of this war. And I think it just comes down to that.
Well, I don't know. Were you guys, did you get a chance to listen to some of the comments that the president made as he was walking to the helicopter? I mean, it didn't sound like, at least based on what he was saying, that we're at the end of this anytime soon. I mean, he says, okay, we won. But then, of course, when asked about whether it would be a ceasefire, said it's off the table. As far as the Strait of Hormuz, he just seemed to say, well, it'll open at some point, which is not necessarily what the market wants to hear.
Why are we asking for $200 billion more from Congress if the war is coming to an end or if we're in a good position? Obviously, so something that'll continue into the weekend.
They should put you on the side of the helicopter and yell questions at him.
Just don't ask me to talk about highs of a stock because I apparently get that wrong.